We will now have the Sustainability Officers webinar, which will be moderated by Mr. Sanjay Sethi of Technopark Advisors. Mr. Sanjay Sethi, I welcome you to the session and kindly request you to go forward with the session on Sustainability Officers webinar. Professor Manish Kumar will moderate the question and answer at the end. So first we will have the panel discussion as planned.
Good afternoon, everyone. I'm Sanjay Sethi from Technopack Advisors, and we at Technopack Sustainability Forum, we have a platform for sustainability officers from various companies. Most of those are from India, and some of those companies are represented today at our panel today. So this is the second such interaction we are doing in three months' time. And during our first interaction, we had got a very strong interest from various sustainability officers asking for a space where we can come forward and share with each other our learnings, where we can have collective action, and possibly we can solve some of the problems. One of the areas that we had felt that sustainability reporting needs a closer attention. There is a little bit of disconnect between what the companies can and want to report and what the investors are asking. And some of those anomalies and some of those challenges are being faced by sustainability professionals and the financial investment advisors on a daily basis. So today we want to discuss about that issue. We have a great panel today, and I would request now the panel to come forward and briefly introduce themselves in about 1 minute time, and then we will get about 4 to 5 minutes for each panelist to talk about the issue, that is the reported environment, social and governance data that is being reported, is it relevant for the investors? So very briefly, may I now request Joe Phelan to kindly introduce yourself. Joe Phelan is the director, India Director for World Business Council for Sustainable Development. Joe.
Thank you very much, Sanjay, and good afternoon, everybody. I'll introduce myself, and should I then go on and make some remarks, or would you like me to wait for everyone else to introduce themselves as well? Sorry?
Yes. So now I request Naresh Tyagi, the Chief Sustainability Officer from Aditya Birla Fashion Retail, to kindly introduce.
Sanjay, I think Joe didn't go through with his introduction. He just has to complete that.
I'm Joe Phelan, and I lead the work of the World Business Council for Sustainable Development here in India, and I'm very pleased to be part of this event. Thank you.
Thank you, Joe. Naresh.
Yeah. Thank you, Sanjay, and good afternoon to everyone. Myself, Naresh Tyagi. I'm Chief Sustainability Officer of Aditya Birla Fashion and Retail. We are the leading retailer of India. We have that 14-15 brand, Louis Philippe, Van Heusen, Allen Solly, Peter England, Pantaloons, so and so. So I will give my perspective because we have been following that disclosure and reporting since last many years. It's a pleasure to talk to all of you.
Thank you, Naresh. And next time, please speak a little louder if it's possible. Sanjeev Elsbarwa is the EHS professional for such a long time and senior person in ITC. Sanjeev, please.
Thanks, Sanjay, and good afternoon to all of you. Pleasure to be here. As you said, I'm with ITC Limited. I head the Environment, Health, Safety and Sustainability Cell. And I think one of the benefits of working with ITC has been our multi-business exposure, which each of them have their own sustainability challenges. And I look forward to sharing my experience with all of you today.
Thank you, Sanjay. I have Tushar Jinan. We have Tushar is the Chief Sustainability Officer for Arvind Fashion. Tushar, please.
Yep. Hi, good afternoon, everyone. And thanks, Sanjay, for this opportunity. Really glad to be amongst the panelists. So, yeah, I'm heading the sustainability and responsible supply chain pillars for Arvind Fashions Limited, and have been in the space, ESG space, for almost 13 years now. Really happy that we are discussing this topic, because I feel that this is becoming the mainstream of pushing the sustainability agenda, and investors do play a very important role. So looking forward to the discussion.
Okay, now we have the only woman speaker today, Shani Kamath from Eversource.
Hello everyone, this is Tejaswini from Eversource Capital. I head the ESG and impact function. I recently joined Eversource Capital in August last year, prior to which, I've had this exciting journey of, working with consulting firms like ERM and Stantec for over 14 years. Glad to be here and look forward to sharing my views. Thank you.
And in the last, we have Sandeep Bhattacharya from Carbon Initiative. Sandeep.
Hi, I am involved in the market development works of Climate Bonds Initiative, which basically means making investors, creating greater investor awareness among investors about climate-friendly investments and facilitating transactions, doing the necessary to facilitate transactions in the same. Great to be here. Thanks, Mr. Sethi, for considering me to be a panelist.
So this is a topic that has a lot of attention in the past. We have seen that a lot of work has been done on the reporting side, and there are many standards. And in my previous interaction with a team from World Business Development, we had done the primary and the secondary research, and we had seen, although in the primary research it was clearly showing that the investment managers do not really ask ESG related questions to a large extent, but our secondary data analysis said that there is a lot of correlation between what the investors are asking and what they actually want. So we have today a very senior professional from World Business Council for Sustainable Development, which is a leading organization in the world, representing the top 200 companies focused on sustainability and implementing the SDG agenda based out of Geneva. So Joe Phelan is the India director and representing those companies in India. So Joe, can you please give us a perspective as to what is that WBCSD has been doing in this space, and what is that the reporting exchange has achieved? And you have compared the ESG data of various marquee companies, and whether is it in line with what the investors are asking, and what is the way forward for us? So all my speakers today, requesting them to keep the discussion within 4 to 5 minutes. Joe, let's start with you.
Very good. Very good. So thank you. Let me do exactly that. And I hope that you can see my screen. I'm just going to take 4 to 5 minutes. So, let me speak about how WBCSD thinks about sustainability reporting and sustainability finance. Our starting point is an analysis of the financial system and its mechanisms, and the non-financial, so the sustainability, the sustainable accounting and reporting system, and the recognition that there is a disconnect between these. They're not aligned, and they serve different purposes. And the financial system is extremely efficient at delivering on its goal, which is to efficiently allocate financial capital. It looks backwards at what has happened and is based on accepted on concrete numbers and contracts and accepted standards and qualities of assurance and so on. The sustainable reporting system recognizes the goals of sustainable development, but doesn't easily integrate into the financial system. So we have been working with 200 companies, many of which are on this call, to improve the connect between these systems. And really, actually, our approach has been to focus on the financial system and see what support, how that can be strengthened, and the support, the systems within businesses, how they can be strengthened to account for other capitals rather than building an entire new system. It's well known that there's lots of pressure on business to respond to broader drivers, societal, environmental drivers beyond just economic growth. So we don't need to do anything on that. Very, very quickly, our thesis is that the transformation needed for a more sustainable world requires better run companies making better decisions that deliver the necessary product, service, and business model innovations that contribute to a flourishing, sustainable society. That capital markets properly value inclusive, impactful, innovative, sustainable businesses, that the most sustainable companies are rewarded, and that ultimately more capital is mobilized towards accelerating sustainable development and meeting the challenge of climate change. You asked what we have done together with our members. So over the last 5 years, we have been creating tools, strengthening existing business frameworks and accounting frameworks, and building the capacity of our member companies to strengthen decision-making inside businesses and to improve disclosure of those decisions to investors. And this sets out all the work we've done around enterprise risk management, working with the COSO framework around aligning the climate assets to sustainability goals, the different natural and social capital protocols, and so on. The reporting exchange is an ongoing open source resource for business that captures all of the corporate ESG reporting requirements for business around the world. So you can run it for India, or if you have operations in Malawi or in Argentina, you can go to the reporting exchange centrally and see what all of the reporting disclosure requirements are for your business in the ESG space. You can see here that we've done a lot of work with companies on preparing for the TCFD, on improving your ESG disclosures, and also a lot around getting standards on assurance and internal controls so that the sustainability information that companies disclose is of financial grade quality data. Lastly, at the bottom of the screen, we have been doing an assessment of all of our companies' disclosures over the last 6 years. So benchmarking them all, looking at trends, looking at good practice. And the fantastic thing is that we have seen significant improvements in corporate disclosure. It's interesting to note that Indian companies usually perform particularly well on assurance and disclosure in this, and are among the leaders for their sector in terms of disclosure. Because of time, I'm going to jump on, but we've made a lot of progress in terms of how companies are implementing these solutions, and there's data on the trends that we see in corporate disclosure. But moving on again, looking ahead over the next 5 years, what we think is really the focus of our strategy is to make this concept of stakeholder capitalism real and rewarding for business. And we now have 5 program areas that are going to help member companies deliver against this goal. And because of time, I'm just going to speak about 2 of these. So, these are the broad areas. One is about defining stakeholder capitalism, making it actionable. The second is building on corporate response to the TCFD. The third, business voice in the sustainable finance space. The fourth is this ongoing work on benchmarking corporate disclosures. And lastly is this community of practice of CFOs. And because of time, I'm just going to speak about 2 of these. So we are launching a joint task force with the Principles for Responsible Investment, which is aimed at integrating both investor and corporate perspectives into aligning reporting standards and valuation. There are too many frameworks and standards and so on, and too much time is spent by companies in responding to all of these, building a community of practice, and also doing work with investors to build their capacity on being able to make good decisions about the quality assurance of the disclosures made by companies. And then the second one that I will speak about is just shaping sustainable finance policy. This is a critical space business. There are important platforms in India in this area, where the government has launched a task force. Some of the people on this call are involved in that. Globally, we are unifying the business voice to engage with policymakers with examples from the real economy and bring perspectives from the real economy to policymakers, with the goal of shifting the financial system to prioritize and reward sustainable business through active contributions to sustainable finance policy discussions. I will end there, and I look forward to your questions. This is a huge area of activity for our members with a lot of content, and I hope that Sanjay will make this presentation available to you. There are a lot of contacts here that you can connect with for more information, as well as with myself. So thank you very much.
Thank you, Joe, for within the and requesting the audience to kindly take note of how to manage your risk through the COSO guidelines. And you must all visit the reporting matters website of World Business Council for Sustainable Development to compare your notes with others, other organizations who have put up their own sustainability reports and which have been given the feedback by WBCSD. And the kind of stakeholder capitalism that is being driven today and led by WBCSD, encouraging all of you also be a member of WBCSD. So I would now turn to Mr. Naresh Tyagi. Naresh, there are so many reporting formats, right from GRE to SASB, and they all have their own advantages. Sometimes I've heard investors asking that I want a SASB format where I can minimize everything in one particular page. So there is a little bit of confusion out there. We would want to ask this question more pointedly from Tejaswini Kamath in the end, from Eversource Capital, and from Sandeep Bhattacharya from Climate Bonds Initiative in the end. But we would want to start from you as to what are the issues that you face, and whatever you will say, those would be compared by also Arvind Fashion, which Tushar comes later. And we want to then ask the investors that two people coming from the same industry, and how do you manage, how do you standardize the kind of information requirement, because company to company their data is different. And over to you now, Naresh, and please we have a time limit for 4 to 5 minutes.
Sure. Thank you, Sanjay. Am I audible?
Yes, louder please.
Yeah, thanks Sanjay. You have already given context, and it's good that Joe has set the context very rightly with the global perspective. What is the landscape of reporting system? This topic, disclosure and reporting, though it is emerged for last couple of years, but still it is evolving. That whole landscape, if you see so many framework and all these things. So I think let me share my experience, how we have coped up with that confusion and multiple landscape of reporting. We as a organization follow always that annual financial report, which was primarily for the shareholder. But now with the stakeholder concept coming into picture, how you have that non-financial disclosure and report in that format. So we started in 2012-13 with the BRR report, where we have non-financial disclosure also into that. And the important thing for us was that who are the people really read these reports? Who are the stakeholder? For them it matter. We disclose all these things and we put that. So I think the whole focus was on that content quality, what we are genuinely doing, how we get different framework and format to follow for our reporting and disclosure. And we find that the GRI is the one standard which is well unified. So we started with the GRI, and that GRI standard, actually in our mind, it was very clear, whichever standard you follow, consistency and continuity is very important, because you can't have that change of standard every year. You may have your framework, which is a fulfilling requirement of all standard, but you need to have continuous content to your stakeholder, because when you are taking 5-year, 10-year goal, and when you are reporting short-term and mid-term, you need to have data consistency and continuity of all that thing. We find that GRI report, I think it's almost 5-6 report now we have done. It's one of that learning we have. In that last couple of years, we got a lot of feedback in terms of criticism, in terms of input, and all these things. And that feedback help us to further look into process, product, and content improvement. I'm happy that to share that all that GRI, even Joe mentioned about reporting matter framework. Some of the third party did that random evaluation of Nifty company, and we found our score from 70 when we started. It has moved to now 90. So all these things give us confidence that framework what we are using is well aligned with that. Now, other thing which come into mind is that how you keep evolving your report, your framework with that some of the other like TCFD or SASB and other thing. So we find that ESG is the better terms, and now ESG is evolving in a manner where investors are looking into that. And we thought that there are a lot of ESG rating company. So how we get that third party validation? We participated voluntarily with that S&P Global Dow Jones Sustainability Index, where we got surprised that in short duration of 3 years, from a score of a low score of 23, today we are that score of 70 plus. And in that, not only that give us confidence on the framework and reporting and everything, but it gives a lot of perspective. What are the further things which we can improve? So I think in my opinion, all these framework are good if you have that right intent, you have right content, and you have in mind that it should not be just what you declare, but it should be more uh, confirm vision, mission, and target which you monitor. You have proper governance system to see that progress on that. And if one or two parameter you find there are challenges, then no hesitation to say that yes, we are working on that. Because when you open up, you find a lot of people coming forward and suggesting, and that collaboration come into picture because you learn from the collaboration. And in that collaboration, I think not only improvement, but it build the whole capability and technical system where you bring a lot of innovation, you bring a lot of stakeholder together, even from society, community, from regulatory. So I think I find myself as a company very useful, and all that investor, though in India still it is early stage of investor asking for it, but global investor, they are appreciating our effort. They are liking that what we are doing in as a ESG disclosure, what we have been setting example for the industry, not as a, it's not mandatory, but as a volunteer, how we take that learning and sharing with that industry sector, with global peer, and how we bring that some sort of improvement and collaboration together in that space. Though still I feel it is evolving, and there is need for one single standard, but standard doesn't matter too much when you have right framework to follow, and you have that right content which you have put your philosophy and your sustainability become part of your business DNA, then framework is the thing to follow. So it's not only necessary thing to follow. So I think organization intent, what you need to disclose to stakeholder, quality and governance system on that, and then having honest and transparent way, if you have performed or not performed, declaring that is the right and authentic way to move on that. So that is my experience. It's still a long way to go, but I think in India we have come in our sector as a lead and as a benchmark which has been validated, whether it is DGSI, CII, Frost and Sullivan, or so many forums. Even that whole reporting matter, WBC SDG framework, we have been rated among the best. So that gives us confidence and motivation. We are on right track. So that all these thing and experience further take us to that next level, and probably when we have that single reporting system, it will be easiest to follow.
Okay. So this is incredible, Naresh. In fact, when we look at a company like yours, the questions that we want to ask, if you have sold 10 shirts, how many of those are actually you are getting back into the system through the waste management systems? And similarly, now calling in Sanjeev into the conversation with a request again for 4 to 5 minutes as time limit. Sanjeev, I know your company does a lot on governance, and that's something that some of the ESG investors and the normal investors, they ask for governance as the main things out of ESG. And you tick almost all the boxes there, and you must already be a darling of the investors. But you also do wonderful work on the water side and on the other environmental indicator side, on social side. But is the customer paying for that? So, or you keep on generating something that your investor is not asking for and is already rewarding you handsomely because of your good score on the governance part. So can you please take us through that within the time limit of 4 minutes, please? Thank you.
Thank you, Sanjay. I'll try to answer what I understood. Thank you for those kind words, but I'm not very sure we are the darling of all investors, because otherwise I think our share price would be higher. But, friends like Joe, for example, he's been nudging us through all these years. And Joe is a big man, those of you who haven't met him. And he nudges means you do tend to travel a bit of distance. But having said that, yes, we have been doing our disclosures for the last 17 years or so. But in terms of ESG focus, I think the penny dropped sometime around January 2020, where the Bank of International Settlements had actually come out with a report called the Green Swan report. And personally, when we read it, it's the first time we understood that there is cognizance by the BIS, and the BIS, as we all know, the reserve banks of some 63 odd countries are members of the BIS. So the reserve banks, including India, they also have to align towards that, where they were saying that money is what would really help in walking the talk. I think Joe also referred to that, because unless it's aligned with the flow of financial capital, the required movement happens due to other reasons, and actually needs to happen for business reasons. So that I think was a very important starting point. And I think some of you would also be aware of the recent EU, the taxonomy, and the SFDR, the Sustainable Finance Disclosure Requirements, which have come. And here, the taxonomy, we have to understand it has come as a type of, I would say, a dictionary to classify what is actually sustainable and to channel funding to what they say genuinely sustainable enterprises rather than greenwashed investments. This is a very powerful statement. And the SFDR, this actually kind of becomes the basis of any ESG claim that anybody are making. And the fact that the risks posed by ESG issues are cognized for during the the investment decision. So all people who are responsible for funding, and I'm sure Tejaswini will elaborate on this later, but this becomes a prerequisite. So now, essentially, when you're looking at sustainability, you're not looking at reporting what you do well, what are the good things that you are doing in terms of being a good corporate citizen, or from something that flows from your ethics system. But what you are actually doing to address the risks to your business. I think this is the key element which has to be understood. And accordingly, your whole process of engagement with your stakeholders in terms of what you seek to know, in terms of assessing your operations, assessing your supply chain, everything happens from a risk-based perspective. So what are the possible risks which will arise due to climate change, for example, on your physical assets? What are the kind of risks that climate change will bring about in your entire agri-value chain? These are things that you'll have to look at. And sometimes they're not very easy to look at because, we haven't done it before. There's no precedence for such things happening. But it's a necessary, I think, step that all of us have to do. And once you do it, and then you get better at it and you learn more, and I think forums like this is also where you share knowledge and ideas, and you get a very, very different perspective of your business. And I think this is the whole requirement of ESG reporting. And with one small qualification that when you look at ESG raters, you'll also have to understand that what are these ESG raters? There are ESG frameworks, for example, where the agency would engage with you and they would have a series of questions. They would have got a detailed questionnaire on which they would want information. And there are also raters who do it, kind of unilaterally. And I think as an organization, we also have to realize that, you need not necessarily get the highest marks in all the, with all the raters and all the frameworks. So you'll have to target those frameworks and those raters which are important for you, which are important for your investors. And accordingly, I think your disclosures would need to be kind of tailored. And when you're tailoring these disclosures, you will also have to cognize for the facts that, it's a process where a lot of data has to be processed across organizations. So certain aids like having keywords, because a lot of this research is done through bots. And so framing the responses appropriately, putting the right language, these are also important aspects of your disclosure. And these are things that all of us are learning. So it is, I would say, in summary, two issues. One is appropriate assessment of your risks and an articulation of those risks and your strategies in a way that makes sense for your providers of financial capital. That's how I would summarize it. Thank you.
Thank you, Sanjeev. Now over to you, Tushar. Would you please take us through the issues that you face vis-a-vis the sustainability reporting and the questions that investors are asking from you?
Sure. Thanks, Sanjay. And thanks, Sanjeev and Raneshji and Joe. I think, I'll speak from my experience, not from only from Arvind, but my experience from EY when I was a consultant for almost 7 years and Novozymes, because, there we came across a number of issues when companies were kind of starting on the journey, barring few like ITC, which were already mature in their journey. The idea was that most of the companies wanted to talk about what is they are doing and how well they are doing. Nobody wanted to talk about what is, probably they are failing at, or where they may not be doing or achieving the targets. So that was the starting point, probably, I would say, in the last decade, where companies were trying to do that. And the focus was never to, kind of look at all the stakeholders, specifically investors, as one of the stakeholders to share the sustainability data. Because at that point of time, I believe the ESG investor space was also very small. Very few investors were kind of looking at the ESG data and were trying to make sense out of it to see if companies are fitting the bill for their investments. But what has happened in the last 1 decade, specifically after the TCFD came into picture, is that a lot of investors have started taking targets for their assets and their investments. And what that has actually boiled to is that these investors are now asking questions that, okay, you are reporting something which is material for you. You have done a brilliant job in certain areas, but how is it going to impact your books? How is it going to impact your books for the next 10 years of 20 years from now? And there the whole idea of assessing a particular material issue for the organization, both from risks and opportunity perspective, comes into picture, where a lot of organizations are now starting to look at the material issues from risks as well as the opportunities perspective. Example would be, plastic may be a big ingredient for our organization, and we have been very closely following the whole plastic waste management rules being changing in the last decade. From making something mandatory, defining thickness, putting the EPR on the brands now also with the latest draft. So these are all things that organizations can talk about, that we are generating this much of plastic, which we are recycling, or maybe X number of X volume of fabric is being used in our supply chain, and X percentage is being brought back as a concept called circular economy. But the point is how it's impacting your P&L, how it's going to help you, and this strategy which a company has adopted for a particular material issue, how is it going to generate value for the shareholders, the investors, as well as the stakeholders in the long run. So I think that has changed, but there's a huge gap because the investors are also learning. They're also trying to make sense whether MSCI is the right platform, or the raters like them are the right platforms which are unilaterally taking the data or the information from the company websites or the reports, or they should directly interact with the potential investors to understand the data or the financial data or information beyond the information which is already on the website. So I believe we have reached an inflection point where investors definitely are asking for financial intertwining of the sustainable data. But at the same time, companies have to be more careful in what they kind of represent in their sustainability reports or in their public website. A simple example would be just saying that we are reducing our carbon footprint by 25%. I think it's something that we have been doing from a long time. We have to move beyond that and say, we have been doing this, and this has been helping us increase or affect our bottom line in this way. Or potentially when the new law or maybe a carbon price comes into picture 10 years down the line, we would be hitting our bottom lines like this. So I think we need to start talking the language investors understand, so that it is easy for them to make sense of the data, and at the same time ask relevant questions. Otherwise, what happens mostly is investors end up asking very standard questions, which the companies may or may not be able to provide. And if they're able to provide, further kind of dwelling does not happen, or right kind of discussions do not happen with the investors, where a company may not be able to project the right opportunities which would make sense for the investors in the long run. So I think we are in a place, and personally, when I was working with different organizations and we are kind of looking at different investors, we were helping investors to understand what is right, what is material, and what you should be exactly asking, and what kind of data would make sense for that question. So if you're asking this question, what kind of data points you should look at and how you should actually interpret that data. So I think that is happening very quickly. In India also, with the new rules coming in and the whole shift of liquidity towards India, I think this is also going to become very important for Indian organizations to quickly adapt to and see how they can actually interact with their investors in the right spirit. So I think that's about me. I think I'm over my time also. So over to you, Sanjay.
Thank you, Vishal, for bringing the discussion about ROI and the language of profit, something that investors need. And now we have about 9 minutes to go before I turn to Manish Kumar for the Q&A. And I have 2 more speakers left, and requesting now Tejaswini Kamath from Eversource. Tejaswini, I would definitely like to ask you, how do you measure these metrics and ensure this cross-system dialogue? And how do you make sure that whatever the investors are asking, that is not too much? In my previous experience as CSO, I have myself seen that how different investors, they make your life so difficult, because everybody asks something so different from each other. And if you have some 20-25 banks to cater to, you totally go bonkers trying to give them what everybody's asking. And without realizing that these are the companies which are at the initial start of their journey on the sustainability journey. So over to you, Tejaswini, requesting you to kindly keep it within 4 minutes.
Sure, sure. I'll definitely try my best. So I can't agree more with you, Mr. Sanjay. And I would just start off by saying that investors are really colorblind. So they really look at black, white, gray, versus the sustainability reports are so colorful, right? I mean, we are giving them so much of information. Maybe the investor one is really trying to dig out the information that they really want. So, in my opinion and in my experience, what really works is to have a set of KPIs for all the companies. And then, irrespective of whether you have 2 investors or you have 10 investors, as long as you know that these are the areas that you need to pursue in your ESG, it really does not matter. Then it is just about putting into different format and giving it out to the investors. Having said that, I also believe that there is currently we are in a state of framework fatigue, as they call, like different frameworks, GRI versus SASB and IIRC. Which one do you really use? And I as part of my consulting career, I found that the companies were really curious as to which is the best. So my take here really is that you need to identify as a company what is your value as ESG. Again, I would go back to the point that ESG and sustainability means very different things to different company, and it is okay. I don't feel that is an issue, because every company will have their own strengths, their own areas of opportunity. The idea really is to demonstrate to any investor that how are you going beyond your immediate circle of influence, how are you incorporating really the challenges and risks which are upstream in your supply chain versus the downstream in supply chain. GGF, which is the fund that I work for, we mainly invest in very renewable energy sector, energy efficiency, waste treatment, water treatment. But here also, our investors are very keen as to recently, I think everybody would have heard about the child labor issue in China, from where the solar panels, 50% of those are being procured. So what are we really doing to, combat that? So that, I think these are very real issues. And just because we are in the renewable energy space, we really can't take it for granted that, that everything is all fine and, we are green sort of sector and there are no issues. So we believe that, there is always an opportunity to go that extra bit. And I don't think that it is something which is like, good to do, but definitely must to do, that should be done and should be reported. Just one last point, before I hand it back to you, is that companies should not shy away from really, sharing if there is a challenge. I think this is something which even Mr. Naresh pointed out. I think more and more you're vocal about the challenges. Definitely, there are organizations like WBCSTs and, your peers who look forward to sharing their experience and coming out with a resolution. But investors, like, on an overarching side, they really know what they want. So it's really important to get that expectation right and then report to that directly, rather than, beating around the bush in a very colorful and a glamorous, sustainability reporting. I mean, that is definitely good. But I think we should not shy away from what is must to have as part of your reporting.
Thank you, Tejaswini, and full marks to you for being a little soft on the companies. And, but I've seen my colleagues taking notes, and I really value what you said. And over to you now, Sandeep. We have a hard close at 2:50 before Manish comes in. And so kindly have a look at your watch, and you are the last speaker. And before you start, I would definitely like to ask you, Sandeep, what exactly is happening in India, especially that climate bond initiative? We all know you do not have a money in your own pocket, and you do not actually give out money to the companies. And yet everybody from the big companies to small companies want to be your friend today. And what is that you have done? And even though the bonds are not really uptaking so much so fast, and whether those are green bonds or ESG bonds, or all those bonds are not really taking off that fast in India, yet most of the banks are asking those deep-rooted questions about ESG data. Is it because of that the climate bonds is the flavor of the month?
Okay, let me try to answer your question at the conclusion of. I need to give a little bit of perspective before I'm able to answer that question. So, just for the benefit of the audience, I represent an organization which doesn't know anything about the S and the G. I only know about the E, and the E confined to climate risks. If you ask me, what is the regulation about how many meters from the beach should I make a resort as per environmental laws, I don't know anything. It's only climate and climate related risks. Now, so we as an organization are known to define what that boundary is for climate. And I would just, since the topic is about whether investors really act, this is a bit of a European story. I'll come to India situation just after this, where oil major came up with what they claim to be a green bond. They self-declared it as green, and somebody else in the market also did. And we have a system of classifying every liability in the market as per what we think is green or not. On this issuance had no contractual link with us, so we refused to do it. And the offering was that there's an offshore extraction technology, extraction of oil, which was 30 to 40% less energy intensive. Our stand was this technology only extends the life of fossil fuels, which goes against the Paris Agreement. So the company came and met us, and later they came out with a plan to transition from fossil to non-fossil fuels, and offered an offering which I think we approved of a lot more. So why did this company come to us? Obviously, it's not about our intellectual content. It is because certain investors were moved by our intellectual content, and since we didn't approve, a lot of investments didn't come in. So in this space and our work, we have this kind of an influence. Answering your question, Sanjay, about India, I would like to state that yes, the glass is half empty and half full as far as India is concerned. Till December last year, cumulative issuances were around $10 billion. This calendar year, I was just counting yesterday, labeled liabilities are around $4.6 billion. So we are close to doing in these 3 months what had happened since 2015 onwards. So whatever we have done in 5 years, we have done half of that in these 3 months. There could be various reasons around that. COVID some forced some people to postpone, but yes, we are working on it. There are not too many debt investors in India who really care about green, unlike say in Europe or even the US, and now increasingly Japan. But then we are working towards it, and that is one of our mandates, to create the mandate for green debt investors. There are many ESG funds which have come out. Most of them don't have climate in their mandate. And maybe we'll move there. They're getting prepared for a declaration of net zero, and slowly regulations coming in, and then the alpha. Thanks. I hope I've answered your question, Sanjay.
Thank you so much, Sandeep. So over to you, Manish, for the question and answer session, and all the panelists are at the call for the questions, and giving a final summary all the listeners that we need to be tightening our methodologies, the metrics which are needed by the investors. Thank you very much, and over to you, Manish.
Thank you, Sanjay. Now I can know that from you people that time is really money. How precisely you finished out on time. So first of all, I will take one question which is not directed to the name specific, and then I will go to the specific, the names to which the questions are directed. So this is one question which is not given that who should answer. So anybody of any of you can do it. That how does local entrepreneur and cultural traditions of indigenous material use can be boosted up and highlighted to attract investors as well as customers?
Okay, Sanjeev, would you like to take it up?
Yeah.
So
and Indian context, it is saying, so maybe Sandeep.
Yes. So let me try to, yes, since I face the investor a fair bit, let me try to take up an answer. It is very sector specific. So in the field of agriculture, we have come a full circle where, during the Green Revolution, we said you use pesticides and you do this. And now we have methods of agriculture which, go back to what our tradition was about using cow dung and cow urine. I'm not batting for any political party. Please don't have that idea, because nowadays a lot of things are politicized. But I've seen with my own eyes, a so-called concoction of cow dung, cow urine, besan mixed and fermented for 3 days, increasing fertility of soil and creating robust crops. So, what does an investor need to see? What we are trying to do is we are trying to create the data to say that using this particular traditional methods leads to stronger crops, and therefore if you give a loan to a farmer who uses this methodology, your chances of a non-performing loans are less. So just because something is indigenous, investors won't come in. Somebody needs to do a study and connect it to the risk with the investor faces, and then hopefully money comes in. And that is to a great extent what we do in many other sectors. I just gave agriculture as an example. Thank you.
Yeah, thank you, Sandeep. The next question is directed to Joe, actually, so it is about, in the context of pandemic, what are the new emergence or paradigm shift you see in the area of sustainable financial policy?
Hey, okay. Well, COVID has speeded up lots of things that were, or sped up lots of things that were happening. And it's also come with political change in the US. And that is already having a big impact on climate policy. And we can see the conversations that are happening here in India about a net zero target. So the world is seeing this as an opportunity to rebuild. Again, Sandeep, you made the point that everything is politicized, and everything is politicized. Absolutely. I think that alongside the deployment of large-scale policy levers, the realization by governments, citizens, business that government has a lot of power if it chooses to use it, and so thought around what can be done to tackle climate change. I think that there is a realization in business leaders of some very important changes in mindset. And we had a publication out yesterday that articulates these, but these are around, fundamentally resilience. And this is something that Indian business has been at the front of. Running businesses that are regenerative and really pushing our business models so that they are circular. And and certainly as a result of COVID, accelerating this, but the very challenging idea of redefining capitalism. Our businesses are run by extremely rational people who make very rational decisions. There was a question in the chat about large companies following financial models. That's what they're designed to do. And where large companies with very big footprints have been able to transition, it's because the markets they've been in have had very certain policy environments. There's been very strong signals from governments about their transition to greener economies. And so I think it's essential, in India, and I do see it coming, that there's, that there are clearer and more consistent, and they have, we've seen what's happened on renewables because of the signals from the government. So those signals are coming across the economy, and that will support the action required by business, a carbon price. Other instruments will drive the action by business. But certainly COVID has sped that up and sped up thinking about what kind of capital system we have.
Okay, Joey, I have one question to you too, but let me give the one to the others first, and then if time remains, I will get back to you. So Tejaswini, one question is that because you talked about the extra bit and doing more. So perhaps in that context, there is a question that how much enough is enough? I mean, how do you realize, or how do you estimate or do that? Yeah.
Sure. No, so I think there is no definition of what is right or what is wrong. I would say a company on its own needs to decide this. My reference really was to go beyond just, let's say, a manufacturing facility, to look at your supply chain, from where your raw material is coming, where is your waste getting disposed, right? So also being responsible for that. But otherwise, I also feel that companies do mistake CSR with sustainability. So these two should be treated very differently. And specifically to this question, I think what can be done more, so that is more in line with what you can do as a company with respect to CSR. But as far as ESG and sustainability is concerned, one is definitely meeting the law of the land, which is the compliance requirement. But secondly, it's also what you think as a company you could do beyond the compliance, raising really that bar, aligning with what your peers are doing, what is best in your country, what is best in your sector. So that's what I was really referring to. I hope that answers the question.
Thank you. There is a one, and again, it is not addressed to any, that should a pure play renewable energy company be asked to sign SBTI and reduce emission and plant few trees, which is less than 1% of emission avoidance it will generate? So this is not addressed to anybody, but it is asking that should a pure play renewable energy company be asked to sign?
I think there's nobody from the renewable energy sector on this call today. Maybe we can take up the next question, Manish.
Yeah. So Sanjeev, just a little bit, maybe in very short, if you can say about some more distinction between sustainability issues and green incentive. I realize that there are a lot of students in our audience, so maybe they want to have the more understanding on that, or the distinction that you have specifically mentioned, that the sustainability issues and being green is different.
Yeah, so I mean, if you look at the whole of E, S, and G, while there is a fair degree of interlinkages, a social housing in Kuwait, which I've come to know, 5 BHK house is supposedly social housing, which the government provides to somebody who's not able to get an income. That's a social welfare scheme. A 5 BHK in Mumbai would be considered, a billionaire's house. So a social aspect is quite difficult to standardize compared to, say, an environment where you can go and say that so many gram equivalent of CO2 emission. So is a governance. A CMD, separating a chairman and a managing director position might be extremely critical in certain countries and might be looked upon as less critical in others. So I gave an example of social, I gave an example of governance and environment. The way we look at it is climate change is coming. How do you mitigate it, or how do you adapt to it? That is where we play in. So these are two examples I gave, which we don't cover, which is a part of sustainability, but not necessarily a part of the environment.
Thank you so much, because this is Sanjay has already told that not extra 1 minute. So this is right on 3 p.m. Sanjay, we have some questions for the different panelists, which we will send to you, and you can communicate to the others and get back to us. So over to you, Sanjay. Before Sanjay conclude the session, I would like to announce that our exhibition visits are going on, and it will be on up to 5 p.m.
So thank you very much, Manish. We will hang around and thank you all the speakers, and thank you Dr. Kiran, Center for Sustainable Development of IIT for having us here, and more importantly, thank you audience for patiently listening. Only 10 people have dropped out through the whole session from 118 to 108. We have dropped only 10 of those, so it shows the interest was very high. Perhaps this is a topic that probably will take it to the international stage, because some people from Asian Development Bank are specifically asked to hold the session for the international audience as well. So our alliance with the IIT Gandhinagar and Dr. Kiran Patel Center for Sustainable Development will continue. And special thanks to Falguni and Professor Ashil Mehra, who have been spearheading this entire initiative. Thank you very much. With this, we would like to close.
Thank you all.
Thank you, everyone. Stay safe.
Thank you. Bye-bye.
Thank you, everyone.
Thank you everyone for participating in the third annual Sustainability Fair organized by Dr. Kiran C. Patel Center for Sustainable Development at IIT Gandhinagar. We look forward engaging with all the stakeholders involved in the sustainable development activities.